morning and happy Monday. A lot of you are probably on a really long weekend because tomorrow is Melbourne Cup. But we're here and we're open. And today I'm talking about the pros and cons of a unit trust to run your business in. So every Monday morning at about 10, I do a Facebook Live. All the videos are then saved onto the page, so you can go to the videos tab and have a look back through everything. I've done a whole lot of videos on wills and estate planning and running a deceased estate because that's what I specialise in. But I've also done a series of videos on buying and selling real estate because TBA Law does a lot of property work as well. And I've done a series on commercial leasing and a series on living in the community with your neighbours and the regulations around trees, fences, drainage. At the moment, I'm doing a series on structuring your business. So again, because I'm a specialist in estate planning, a lot of asset protection and the forming of trusts and the moving of assets comes into having your structure right. And I've already covered off the pros and cons of being a sole trader, pros and cons of operating your business as a partnership, and the pros and cons of operating your business as a company. And like I've said in the other videos, it all comes down to what stage of business you're at. There's different pros and cons depending on your objective. So if you're just starting out in business and you're by yourself, a sole trader is fine. But as your revenue starts getting upwards of around 150,000, you probably need to look at a different structure, particularly from a tax perspective and potentially from asset protection as well. Similarly with a partnership, you're probably looking more like a revenue of upwards of 300,000 where you want to be looking to restructure. And sole traders and partnerships all have a lot of asset exposure in them. Then we start getting to the more complex structures. So last week I talked about companies, and this week I'm talking about unit trusts. Next week I'll talk about discretionary trusts, but I'll give you a basic overview of what a trust is. So a trust is a strange legal construction where assets, including a business, are held by someone else for beneficiaries. So that relationship creates a trust, and you can have really simple forms of trusts, or what we're talking about are far more complex versions of a trust. So with a trust, you have a trustee, which is the person who is running things day to day. Then you have a whole list of beneficiaries. And in a unit trust, these beneficiaries are the unit holders. So, a unit trust, I think, is really great when people are in business together who are not family members. Generally, if people start out trading as a partnership and they're ready to go to the next step, I would suggest that they jump straight to a unit trust rather than into a company. So you'd have a company as well, and the company would be the trustee of the unit trust. So from a partnership, once you're earning a fair bit of revenue and you're ready to upgrade your structure, a unit trust would be my suggestion if the partners aren't family members. So a unit trust is, in a way, it's an easy way of thinking of it like a company, because in a company you own shares. In a unit trust you own units. And depending on your ownership of units is how much of the profits you get out of the unit trust. Okay? So that's why I think that a unit trust is such a great structure. However, it has other benefits that a company doesn't have. So from a tax perspective, income tax, if you've got a corporate trustee, so the company is running the trust as the trustee, then you've still got the flat rate of tax at 30%. So at least you're saving on tax there. However, with a unit trust, there's more benefits of using a trust rather than a company because you can trap tax losses in the trust and it doesn't become the obligation of the directors of the company or the owners of the units of the trust. So there's some extra benefits from a tax perspective in a trust that a company doesn't have. The other thing is it from a capital gains perspective. So if your business was starting to buy assets or buy the land that the company works out of, in a unit trust, you get the 50% discount on the capital gains tax if you've owned it for 12 months, whereas in a company, you get no 50% discount. There's other things that apply, but you get small business concessions in a unit trust as well. And if you have a loss, the loss can be trapped in the trust and again, not come out to the beneficiaries. So from a tax perspective, that's why I think a unit trust is a step up from a company. Rather than going from a partnership to a company, then to a trust, just jump straight to a unit trust. Asset protection is right up there. If your objective is to protect your liability and make sure your house is not at risk if your business goes under, both a company and a trust provide great asset protection. There are some liabilities for unit holders in a trust, just like there are with directors of a company. So if you do the wrong thing when you're running a company, you can become personally liable. Same thing with a unit trust, okay? So there's no completely escaping it. And of course, if you borrow money and you give a personal guarantee, then you've just undone your whole asset protection. So you would keep personal guarantees to a minimum. Control and succession, all of this then is determined by the deed for the unit trust. So you can write into your unit trust whatever you like in terms of how the succession works. And most of the time you're probably going to have a unit holder agreement as well. So the unit holder agreement will determine if someone leaves the business, how much they get paid out, what the value of their unit is, and who has the right to buy their units. So if all of this is set out at the beginning, there's not going to be an argument if someone has to leave suddenly, retire, or is suddenly terminally ill. All right, so there's so much more flexibility around the control of succession with a unit trust than, for example, a partnership, because it's difficult for a partner to value the other part of the partnership, whereas a unit is a defined piece of the business, defined percentage, and a value can be worked out far easier. Setup and running costs. So obviously the more complex the structure, the more costly it can be to set up. But the ongoing running costs are not any more than, for example, running a company. So your partnership is a really simple structure. There's not much cost to starting it up at all. Once you start looking to upgrade your business into a company or a unit trust, you've got the registration for the company and the establishment of the trust. So you're looking at about $2,000 all up for that. And then your ongoing costs are your tax return for your business, which you'd have anyway, and your ASIC annual registration for your company, which is about $160. So you've got the exact same continual running costs on a trust that you would on a standard company anyway. So again, rather than jumping to a company, if you're a partnership, I would upgrade straight to a unit trust. So I suppose those are the main pros and cons of a unit trust. So you wouldn't want to go into a unit trust until your partnership was, requiring it. Like I said, revenue of at least over $300,000 before you'd look at upgrading your structure from a simple partnership sort of arrangement. Because again, the pros and cons of these structures depend on what size your business is and what stage your business is at. And you don't want to start your business in a partnership and then potentially run your business as a partnership forever if it becomes a multi-million-dollar business. You need to be thinking about succession and tax and asset protection and control and all these things as you go, and upgrade as you go as well. So don't get so busy in your business that you don't take care of the structure of your business. So there you go, pros and cons of a unit trust. And the final video in this series will be next week when I do the pros and cons of a discretionary trust. And I'll talk about again what a trust is and what the differences between a unit trust and a discretionary trust are. Okay, so hope that was helpful. Again, I will save this video onto the page. If you think it's useful for anyone, please tag their name in it so that they can watch the video. Otherwise, I'm here doing a short snippet of legal information every Monday. If there's anything particularly that you want me to talk on these Monday morning sessions, you're quite welcome to message us through our Facebook page, or you can email me direct. You can find all our staff email addresses on our team page on the website, and we would really love to hear from you. But otherwise, I hope you have a great Melbourne Cup Day, and I'll see you next Monday. Have a great week.